Hello everyone, I hope you are doing fine. In this video, we will be solving some numerical problems step by step for the fund flow statement. Let's go to the preparation of the fund flow statement with the detailed numerical problems and the solution. The fund flow statement analyzes the changes in the financial position between the two balance sheet dates, focusing on the sources and the using of funds. So basically, when we talk about the fund flow statement, it generally helps to analyze the financial position between two balance sheets dates. Also, it makes a focus on the sources and uses of funds. Let us just solve different problems. We are given that we have a balance sheet. So we have one problem, our very first problem, that is we are given a balance sheet of XYZ Limited. Given that XYZ Limited balance sheet as on 2022 and 23. So, first of all, particulars. Then we will have 31st December 2022 and 31st December 2023. Okay. In it, we are given assets such as cash. We are given assets such as cash. Cash, accounts receivable, inventory, equipment, accumulated depreciation, and after that, the total of the assets. After that, we have our liability side. In the liabilities, we have the accounts payable, we have the bank loan, we have the equity, we have the common stock, we have the retained earnings, and then we can reach up to our total assets, sorry, total liabilities and equity. So, cash as on 31st December 2022 is 10,000. And for the next year, it is 15,000. Accounts receivable are rupees 25,000 for the 22 and 30,000 for 23. Then inventory for the year 22 we have 40,000, and for the year 23 we have 35,000. Equipment for the year 22 is 80,000, and for the year 23 is 90,000. Accumulated depreciation is 20,000 and 25,000, which makes our total assets as 1,55,000 for the year 20,000. Sorry, for the year 2022, and 1,45,000 for the year 2023. Okay. Now let us just move to the liabilities side. As far as the liabilities goes, we have the accounts payable of rupees 30,000 for the year 22, and for the year 23 we have 25,000. Bank loan, we have 20,000 for the year 2022 and 30,000 for the year 23. Then equity, a common stock of 50,000 for both the years, and the retained earnings of 35,000 for the year 2022 and 40,000 for the year 2023, making it my assets and liability side as 1,35,000, 1,35,000, and 1,45,000. So this all was given in the question. What else is given? We have been given that some additional information is also given to us. That is net profits for the year is rupees 15,000. Dividend paid is rupees 10,000, and depreciation for the year is rupees 5. Now let us just solve it. First of all, we will calculate the changes in the working capital. We will here calculate the changes in the working capital. Now, actually, working capital is the difference between the current assets and current liabilities. Okay. So here we will first make the schedule of changes in the working capital. When we talk about the solution, here it will be like that. The first thing that we'll be making is schedule of changes in the working capital. Okay. So for that, we need to write down the formula for the working capital first. So that what is the working capital? So the working capital is the difference of total current assets divided by the total current liability. Sorry, subtraction to the total current liabilities. Now, let us just make an statement of changes in the working capital. So, statement of changes in the working capital. It will be like this. First of all, particulars, then we have 31/12/2022, then we have 31/12/2023. Then we make another head which is changes. We will make another head that is the changes. First of all, current assets. Cash. Accounts receivable, inventory. This makes up my total of the current assets. Okay. Then we have the current liabilities. That is the accounts payable and working capital. This is my total current liabilities. And then you will have the working capital. Okay. So, talking about the cash. For the year 2022, the cash is rupees this much. That is 10,000, and for the next year it is 15,000. Changes is 5,000, and it is favorable change. That means you will denote it with I, meaning increase. Accounts receivable, we have the accounts receivable as 25,000 for the year 2022, and for the year 2023 the accounts receivable are 30,000. That means there is also an increase of 5,000 in there. For the inventory point of view, the total inventory was rupees 40,000 in the year 2022, and in the year 2023 the inventory decreased from 40,000 to the 35,000, making it short by 5,000, hence decrease. This makes my total current assets as 40 plus 50 plus 10, that is 75,000. For the year 2022, and 35 plus 15 is 50, and 50 plus 380, it makes 80,000 for the year 2023. That means there is an increase in the total current assets by 5,000 for the entire year. Now, as far as the current liabilities go, we have only one current liability, that is accounts payable, 30,000 for the year 2022 and 25,000 for the year 2023, which makes it a decrease of 5,000 over the year. Hence, my total current liability came out to be 30,000, and total current liability here came to be 25,000, making it an decrease of 5,000. Hence, the working capital is the difference of total current assets to the total current liabilities, making it 45,000. That is the 70,000 minus 30,000 for the year 2022, and 55,000 for this, and rupees 10,000 in total changes. Okay. Then the second statement which came out to be, so the second thing that will came out to be is sources and uses of funds. So here we will talk about sources of funds. Number one sources: issue of bank loan. Bank loan went from 20,000 to the 30,000. That means the bank loan was issued for how much? 10,000. Net profit went from 10,000 to the, we have given it is given in here that the net profit is 15,000. So the net profit will be 15,000. This is also a source of fund. Then decrease in inventory. There has been a decrease in the inventory because it is shown in the balance sheet. That means the person might have the additional fund of 5,000, which will be reflected in here. Then decrease in accounts payable. Decrease in the accounts payable, making it for rupees 5,000. This is also can be seen in the balance sheet that the accounts payable decreased from 30,000 to the 20,000. So this was basically the sources of the funds. A bit of more we'll talk about again the uses of funds. Increase in accounts payable. Accounts payable got increased by rupees 5,000. This is there. Sorry, accounts receivable. by 5,000. Then, second, we have the purchase of equipment. We purchase an equipment of rupees 10,000 and we paid the dividend of rupees 10,000. That means we have the total sources of funds as 35,000 and the total uses of funds as 25,000. Okay. Now next up, net increase in working capital, which will be equal to sources of funds minus uses of funds. 35,000 minus 25,000, which will be equal to 10,000. Okay. Then, in the third step, we will make the fund flow statement. In the next step, we will make the fund flow statement. So, this will be the fund flow statement of XYZ Limited for the year ended, the XYZ Limited for year ended 31st December 2023. Here we will take it as sources of funds and amount. First of all, we'll talk about the sources of the fund. What are the sources of the fund? Number one is issue of bank. Then is the net profit. Then is the decrease in inventory. And then is the decrease in accounts payable. That means we have the total amount of rupees 10,000, 15,000, 5,000 and 5. Making it my total sources as 35,000. Okay. Then comes the uses of funds, where these funds are used. Then is the increase in accounts payable, purchase of equipment, dividend paid, After that, the total uses 5,000, 10,000. Dividend paid is again rupees 10,000, making it the total usage as 25,000, resulting in a net increase in the working capital by 10,000. So this is how the fund flow statement will be prepared. Let us just understand it. So we were given a balance sheet and the additional information was given to us. Then we made the schedule of the changes in the working capital. After that, we identified what are the sources of fund and what are the uses of the funds. After that, we calculated the net increase and decrease in the working capital, and after that, we were able to manage and make our fund flow statement. Okay, so this was one problem. We will continue to do the other problems as well related to the fund flow statements in the upcoming video. I hope you have understood, guys. Thank you so much.